I want to ask you a question, and I want you to answer it honestly, even if just to yourself. Do you have an Indian PAN card? Do you earn a salary in the Gulf? Do you have Indian mutual funds, fixed deposits, or property back home? If your answer to any of those is yes, then the Indian government may already have information about your financial life that you have never reported anywhere. I am not saying this to scare you. I am saying this because a new global information sharing system combined with India's brand new Income Tax Act that came into force this April has changed the rules completely. Today I'm going to explain exactly how India is now receiving financial data from over 100 countries, including every GCC nation. I'm going to tell you what the government can now see, and I'm going to give you a clear checklist of what every NRI must do right now to stay fully compliant and protected. This is not about avoiding taxes. This is about making sure you are never on the wrong side of a system that is getting much more powerful very quickly. Before we get into this, if you're new here, my name is Vinod Pottayil. This channel is built for one specific person, the NRI who is working hard abroad, building wealth in India, and wants real, specific answers, not generic advice that ignores our situation as NRIs. If that is you, subscribe right now. I cover mutual funds, retirement planning, tax compliance, and goal planning, all from an NRI perspective. Nothing generic. Everything that actually applies to us. Hit subscribe. It takes 2 seconds. Let us get into this. Let me explain exactly how this works. There is a global framework called CRS, the Common Reporting Standard. It was created by the OECD, the Organization for Economic Cooperation and Development, in February 2014. Under CRS, banks and financial institutions in participating countries are required to collect information about foreign account holders and automatically send that information to the account holder's home country every single year. What this means in practice? If you are an Indian citizen living in the Gulf and you have a bank account there, your bank is collecting your information and reporting it to that country's tax authority. That authority then automatically shares it with India's income tax department every year without you doing anything. Automatically. Now B, how many countries is India receiving this data from? India has activated this automatic information sharing relationship with 111 countries. 111 countries, including every GCC nation, including the UK, USA, Canada, and Australia. And India is not a new participant in this system. India was one of the early adopters of CRS, committing to exchange information automatically from as early as 2017. What information is being shared? Here is the exact list. Your foreign bank account balances, interest earned on those accounts, dividends received from foreign investments, proceeds from sale of financial assets abroad, your name, address, date of birth, and taxpayer identification number. This is not future technology. This is not a plan. This is happening right now, every single year. And the Income Tax Department of India has a dedicated unit called the Foreign Assets Investigation Unit, or FAIU, specifically set up to process this incoming CRS data and identify discrepancies between what India receives about you and what you have filed in your Indian tax return. And here is what makes this dangerous for many well-intentioned NRIs. You do not have to be doing something illegal to get a tax notice. You just have to have a mismatch between what India receives about you and what you have filed or not filed in your ITR. The system is now receiving financial data at a scale India has never had before. This slide will be shared on WhatsApp and Instagram. Now, I want to tell you something that even most tax professionals in India are still catching up on. CRS is not staying the same. It is expanding. In August 2022, the OECD approved major amendments to CRS, now being called CRS 2.0. These amendments expand the scope of what gets reported. Going forward, it will not just be your bank accounts and investments. Crypto assets, digital currencies, and electronic money products are all being added to the reporting framework, and India is fully aligned with this expansion. In February 2026, India's Central Board of Direct Taxes, the CBDT, released new draft rules. These rules propose to replace the existing CRS rules and expand India's reporting framework to include crypto assets and central bank digital currencies from 2026 onwards. And it is not just the government that is preparing. Over 4,000 financial institutions in India are classified as reporting financial institutions under CRS. They are all legally required to collect and submit your information. The system is not getting smaller. It is getting bigger, faster, and more automated every year. Now, on top of this global information sharing system, India just replaced its entire Income Tax Act. The old Income Tax Act of 1961, the law that governed Indian taxation for over 60 years, has been replaced. The new Income Tax Act 2025 came into force on April 1st, 2026. Right now, as you are watching this video, you are living under a completely new tax law. For most NRIs, the core principle has not changed. If you are a genuine NRI, you are still only taxed on income earned or received in India. Your Gulf salary is not taxable in India. That remains the same. But there are three specific changes that every Gulf NRI must understand. Change number 1. The deemed residency rule is now actively enforced. Under the new law, if you are an Indian citizen living in a country with zero income tax and your income from Indian sources exceeds 15 lakh rupees in a year, then even if you spend 0 days in India, you could be classified as a tax resident of India. This rule existed before, but under the new Income Tax Act 2025, the compliance monitoring and enforcement behind it are significantly stronger. Change number 2. Digital data matching is at a scale India has never had before. The new Income Tax Act explicitly expands the government's digital monitoring capabilities. Your mutual fund redemptions, property transactions, NRO interest, and the CRS data India receives from abroad, all of it is now being cross-referenced automatically. An honest gap in your filing is no longer likely to go unnoticed. Change number 3. A one-time amnesty window is open right now. A one-time amnesty window is open right now, but not forever. Budget 2026 introduced the FAST DS 2026 scheme, the Foreign Assets of Small Taxpayers Disclosure Scheme. If you have foreign assets that you have not properly declared, this scheme allows you to come forward, pay a structured penalty, and close the matter without criminal prosecution. The total liability under this scheme is significantly lower than what you would face if the Income Tax Department finds the discrepancy themselves. This window has a 6-month limit from the date it is officially notified. It will close. This structure is what makes the video shareable and quotable. Now, some of you watching this are in the Gulf, and you might be thinking, I do not pay income tax here, my salary is not taxable. I am safe. You are right that your Gulf salary is not taxable in India, as long as you maintain your NRI status correctly. But here is where Gulf NRIs face specific complications. First, the deemed residency rule I just explained is specifically written to catch high-income NRIs living in zero-tax countries. The Gulf is a zero-tax region. If your Indian income, rent, interest, mutual fund gains crosses 15 lakh rupees and you live in the Gulf, this rule is written for you. Second, many Gulf NRIs have NRO fixed deposits, Indian property rental income, and Indian mutual fund gains, but have never filed an Indian ITR. This is incorrect if your Indian income crosses the basic exemption limit. Third, Gulf NRIs who visit India frequently need to count their days carefully. Spending too many days in India, even for family reasons, can affect your residential status and completely change your tax situation. Speak as if talking to a friend from the Kerala community in the Gulf. That tone is what drives WhatsApp shares. Okay. I do not want to leave you with fear. I want to leave you with a checklist. Here are 5 things every NRI must check right now. Number 1. Confirm your NRI residential status is correctly established. Check how many days you have spent in India in the last 4 financial years combined. Under the new Income Tax Act 2025, your status for tax year 2026 to 27 must be reviewed against the new rules, not the old ones. Number 2. Check whether you need to file an Indian income tax return. If you have Indian income above the basic exemption limit, you must file. Not filing when the income tax department already has CRS data on you is the worst possible position to be in. Number 3. Review your NRE versus NRO account structure. NRE account interest is completely tax-free in India for NRIs. NRO account interest is taxable. Number 3. Review your NRE versus NRO account structure. NRE account interest is completely tax-free in India for NRIs. NRO account interest is taxable. Foreign assets include not just bank accounts, they include mutual funds held abroad, foreign property, retirement accounts, and insurance policies. If you have any of these and have never declared them, take legal advice immediately. The fast DS 2026 amnesty window is your best option right now. Number 5. File your Indian tax return on time this year. The deadline for NRI income tax returns for FY 2025-26 is July 31st, 2026. This is the first assessment year being closely monitored under the new data matching framework. File on time. File correctly. Keep your documents. Everything I have shared in this video is for educational awareness only. This is not personal, legal, or tax advice. Every NRI's situation is different. For any specific compliance decision, please consult a qualified chartered accountant with NRI expertise. The rules I have described are current as of June 2026. Let me close with this. India's tax system is not your enemy. The new Income Tax Act 2025 was designed, at least in part, to simplify compliance. If you have done nothing wrong, you have nothing to fear. But you do need to know the rules, because the system is now better at finding mismatches than it has ever been before. That is why I make these videos. Not to create fear, but to make sure that you, as an NRI who is working hard and building something real, are never caught off guard. If this video helped you, please share it right now with one NRI friend or family member who needs to hear this. There are millions of NRIs out there who have no idea this system exists. I am Vinod Pottayil. This is NRI Financial Insights. Subscribe for content built specifically for NRIs like us. I'll see you in the next video.